of crowdfunding, of course, there's various benefits and various risks, but I think there's a lot of people that want to aggregate, and it's almost like a like-minded thing with the crowd. So, as my background is in trading and investment banking, and it's not so much that, as Brian and Charlie are full-time investors, I want into the game too as an investor, so I don't have the time to do the due diligence 2-3 months, and therefore one of the things of, just quickly, our platform, Smart Money Entrepreneurs, it's actually a venture capital kind of angel investment run platform for bankers and traders. So as a trader, I don't have the time. I may have 20-25 minutes to look at a deal, right, if I'm looking at like a trading type thing, and invest $15,000-$20,000, which if I have a brokerage account, it may be less than 1% of my whole portfolio. So $20,000 I may put in a startup, which may get a startup started. So I don't have the time, but I want to invest. And therefore, the crowdfunding idea is to take a lot of those $20,000.
I don't have the time to think about what I'm investing in because I want to throw money at an idea.
No, not time in terms of the value of the deal, but if an angel or a VC can do the due diligence for me, which a lot of our community, but a lot of communities, it's like a hedge fund. Hedge fund funds are funds. A lot of investors in hedge funds like to do the individual hedge fund rather than a fund of funds. They're still in a fund, but it's a different type of thing in terms of fund of fund versus a regular fund. In the sense of I want to invest myself. And right, but
I help him out a little bit here because I'm on the board of a crowdfunding site called MedStarter. So I know a little bit about this. The first thing that's going to happen is that people in the investment world are going to say, no way, not going to happen. What are you going to do that's different? So there's two things that are different. One of them is that you do have the crowd doing some type of due diligence for you. Now, rational investors, and you're very rational people, will say, but we do due diligence. And the thing is that this is the marketplace doing due diligence. This is the marketplace telling you what they like. They may be stupid, they may be wrong, but if they're buying it, that's the market. That's the gospel. If your customers tell you what they want, that's the gospel. Because in case you don't know this, Jesus didn't write the gospel. It wasn't even his disciples that wrote the gospel. It was the followers of the disciples that wrote the gospel. So that's what the gospel is what your customer base wants to hear from you. So this is really important. In crowdfunding, emotion is going to be a big deal. If people love you, if they love your product, if they love your brand, if they love your personality, they will give you money. They won't just buy your jeans or your pants or your software or your app. They'll buy you and the app. They'll want to own a piece of it. And that's an opportunity that never existed before. So I'm telling you, things will be different.
Go get him, Charlie.
So the market really wanted Facebook at $38 a share. And turns out it wasn't worth $38 a share. Everybody was really excited, and everybody who didn't do their homework, who didn't have time, was like, oh yeah, Facebook's really big, I want in, right? And a lot of the professionals were actually evaluating the future potential of the company, who actually knew what they were doing, and saying, you know what, I don't really want in on that sort of stuff, right? Hold on.
Screwed over the market.
Wait, hold on. And so there were plenty of people who jumped in expecting to make a quick buck, and it didn't happen. Okay? If you are an angel investor and you're expecting, or you have money, and you expect to go on a crowdfunding platform and make a quick buck, it's not going to happen. So yes, there will be crowd. And by the way, you got a chance to speak. You got to let. No. You got to listen. You got to listen. All right. First of all, there's a difference between crowdfunding and crowd investing. Crowdfunding is awesome. If you want to do an art project or you want to pre-sell some hardware, right? Like I bought a bike light on Kickstarter and it wasn't even made yet, so I had to wait 6 months, and the guys went and made the bike light. That's not investing in the company. I expected my bike light when I was done. I didn't bet on that as an investment entity, right? First dibs, that sort of stuff is awesome. I'm investing in a company called Window Farms. Britta Riley, the entrepreneur, pre-sold $250,000 worth of her product on Kickstarter, proved it out, got it up and running. Now she wants to build out a team, raise $1.5 million. She wants a professional investor to get on board with that. That's great. But crowd investing is not going to replace an experienced investor who's done this before and it's not going to replace a way to get investment returns. We did this already in the public markets in the late 90s. Everybody throwing money at dot-com startups, and it turned out to be a big model.
It's so bizarre. I mean, you're a logical guy. Just because there's an opportunity doesn't mean
correct this? No one said replace. Like, it's a compliment. The question was,
Crowd will make its own mind.
You're saying it's a great idea. I teach angel investing to angels, and you know it's about being a smart investor always, right? Anybody here want to be a stupid investor? No.
there's a serious topic.
You raise your hand to be a stupid investor. It's really incredibly important in our business to make as smart investment as you can.
I just want to throw one little point in. I think when we talk about, Charlie said, crowd investing versus crowdfunding, I think there's two markets here. You have the investment market. You have the skilled investors who look at a business as a business. Then you have a consumer. A consumer goes to Kickstarter and buys a product because they're excited. This is something new. I want to be part of that. I think crowdfunding is kind of like a higher level of Kickstarter. Because who are the people? Somebody who bought the Pebble watch. This is the coolest thing. They probably want to invest in Pebble because I love this. People who bought an Apple product that they could buy and $700 would want to buy a share of Apple. So I think we're talking about two totally different markets.
That's what he's saying.
But some of the people are actually looking for real returns. One thing, if you want to be, if you want to have a couple of shares of Pebble because you think it's cool and you want to feel part of the team, that's great, but don't expect a return for that. No, by the way, a lot of angel investors do the same thing. There are a lot of angel investors that have all the money in the world that don't really care about their return. Like, you know what? You're a cool team. I want to back you. I don't think I'm ever going to make money for you, but you know, that's fine. And plenty of angel investors do that. The blurry line is when you think you're actually going to get real return. If you actually want to get real return, there should be a platform for crowdfunding of funds. If you all want to contribute your 401ks to to get into Union Square Ventures, or to get into Brooklyn Bridge Ventures, or get into First Mark, or whatever, like, I personally think you should be able to do that, but have a skilled investor at the helm versus you picking out individual deals. That would be a great use of crowdfunding.
So let me change the equation just slightly. The last 10 years have gone by. That's a nice horizon period. Everybody read the Kaufman report. I'm sure you read the Kaufman report on how well the venture capital industry did over the last 10 years. There you go. Well, they did crapola, right? They're underwater. So the brightest, they're all friends, and we know them, but the brightest people who are supposed to be able to pick and choose the best opportunities to win, you did better than they did by investing in equities. You would have done a lot better than they did. Picking and choosing is really, really hard. And so if you ask other people trying to pick and choose, I can't imagine them doing much better.